Hey everyone, and thanks for jumping back into the cryptoverse. This is Not Financial Advice Live or NFA Live. We do this every single Thursday or sometimes Fridays, just kind of depends on the week. But we just sort of talk about crypto, talk about what's going on in the macroverse, all sorts of stuff, get all sorts of opinions from people. This week, it's obviously on my channel. We have our two special guests, as always. We have Rob from Digital Asset News. Link to his channel is in the description below. And then we also have Guy from Coin Bureau there at the bottom. And the link to his channel is also down in the description below. So if you're not subscribed to these guys, make sure you go subscribe. Next week, we'll rotate where it is, and it should be on Rob's channel next week. How are you guys doing today?
Great. How you doing?
Pretty good?
Yeah, I'm good. Thanks, Ben. I'm good. How's life with you?
Pretty good. Just trying to get through the year. And you know, we sort of talked about this year as sort of just being kind of like a year of recovery for the cryptoverse and just sort of grinding through. And I want to talk about a lot of different things. And you know, some of the first things I want to talk about are things on the macro side, because there were, of course, some developments this week with expectations for interest rates based on some recent inflation readings. We want to talk a little bit about real estate. I know Rob is in the real estate market, or he's an investor in real estate, and there's obviously some interesting things going on over there. And then we can talk more about. I know this is boring, but I do want to at least get your opinion on fixed income investing, and then we'll get to crypto at the at the end. We'll wrap it up with what most people want to hear. Which is, what are some considerations you're making for various investments in the cryptoverse, and then the last thing will be about sort of speculating as to what 2025 would look like. But without further ado, let's go ahead and jump in. So Rob, I'm going to start with you on this, and essentially the question is around what's recently happened with Jerome Powell and some of the remarks that he made. So just to give you a couple of quotes here so we have the reference, he says, if, and I stress if, that no decision has been made on this, but if the totality of the data would indicate that faster tightening is warranted, we would be prepared to increase the pace of hikes. At the end of last year, we saw a couple of very promising modest inflationary readings in November and December, but earlier this year, some of that improvement was revised away. In addition, we got a very strong reading on inflation in January, also very strong jobs reading, also very strong retail sales. As I pointed out in my testimony, we are looking at a reversal of what we thought we were seeing, to some extent a partial reversal. And if you look at the expectations for the interest rate hike in March, which is coming up here in not too long, it's now shifted to 50 basis points. So I'm curious, is this the pivot that everyone's talking about, but back to a more hawkish Fed rather than to a dovish one? And do you think they're going to go with 50? Do you think it'll be 25? And what do you think the implications are?
Okay, this is all just guesswork, but like
no,
we
we're all
talked
going
about
to quote you.
beforehand.
We're all quoting you on this. So
Yeah, quote it, lock it in stone. This is exactly what's going to happen. But this is not this is not the pivot that we were hoping for, right? It's not the droid that you were hoping for. This is not the pivot. We were hoping that we'd be a little more dovish. But I mean, we've always talked about this, haven't we? We've always said, I think all three of us have said the same thing. Jerome Powell says one thing, and he does that thing. And it's like people in the market will say, well, because if we take a look at this, they're going to take a look at this data, they're going to do something totally different. And I just take a look at what he said before and just go, he's probably going to do, raise these rates. Now, 25 basis points to 50 basis points. I saw a lot of people after that conference, or after that press conference, where they said, he talks a good game, but he's still going to raise it 25 basis points. And I'm thinking to myself, I'm like, well, didn't the unemployment rate actually go down? And we were at 3.4, and didn't inflation actually go up? And that's not what we had. So I don't see how he would. So the thing is, the question always is how do I take action? So for me, I look at it like this. These numbers are going to come out March 14th, right? Somewhere around there. So if you're looking to do something in this situation, I personally think, first of all, I think he should raise them to 50 basis points. And I think as you get older, And Jerome Powell is kind of looking at like, what's my legacy going to be? Am I the guy that took the foot off the gas like Burns, which nobody remembers, or am I going to be Federal Fed Reserve President Volcker? Thank you.
Volcker. Yeah.
Or am I going to be the one that's going to lead us into the Great Depression or a soft recession? So for me, I just look at it like this: if you think that they're going to go 50 basis points, all you got to do is wait for that day. Wait for that day. If you're dollar cost averaging, go, okay, let's see what the announcement is. If they come on at 50, guess what? It's going to disrupt the markets. They're probably going to go down. Just wait a little bit. Wait a little bit, 2 or 3 hours, see what the markets do. If they go down, maybe you scoop up something at a discounted price. Maybe if you're a scalper, you trade it later. That's not my thing. But let's say they come on and go, you know what? 25 basis points. Well, all right. That's probably not going to move the market that much. I'm going to buy immediately for my dollar cost average day. So if you're taking a look at what's going to happen, I don't really know. But I mean, Jerome Powell has pretty much said, like, I don't want to be Burns. I want to be more like Volcker, and I want to lead us to the Great Depression because it's all about my legacy. That's where I got.
Yeah, no, it's an interesting dilemma that he's in, because you can see that the sort of the political pressure is starting to ramp up on him based on some of the comments he was having sort of listened to yesterday. I'm like, well, he knows this is going to keep happening, so why not just get the interest rate hikes out of the way? Continue to front load them, because it's going to be harder and harder, I think, as time goes on. And by the way, I think we get new jobs data tomorrow. I think. Yep. I think that's tomorrow,
yep,
and then
Friday.
And then inflation next week. Guy, what's your perspective on this? I mean, I know over the last several weeks, this recent rally by a lot of risk assets seemed like it was rallying in the face of higher inflation, and it's like sort of scratching our head about it. But does this sort of make more sense? Some of these revisions that we've seen, and what's your take on potentially seeing that 50 basis point rate hike?
Yeah, it does make more sense, I think. The data suggests, I mean, we had that data from, December and January. That data was revised, wasn't it? So the fact that the rate that inflation was falling turned out to be not quite as steep as it first appeared. And yeah, I mean, I think now with hindsight, that wonderful tool that we all get to use at some point, with hindsight, I think the consensus is that they probably should have hiked by 50 basis points at the last meeting, and they didn't. And picking up on what Rob said, I think, absolutely, I 100% agree. I think Jerome tries his darndest to do exactly what he says. I don't think he wants to shock the markets. I think this is part of his strategy to try and engineer this soft landing, is to mean what he says and to do what he says. So yeah, I think, and I think also as well, the fact that we now have this much higher expectation of a 50 basis point raise. Is it next week, on the 22nd, week after? I think that now that expectation is there, I think that could give the Fed, the extra little push that it needs to do it. So in short, I think we probably will see a 50 basis point hike, and I think that is probably the right thing to do. It underlines just how important the next few days are in terms of the data that's going to come out. We've got this jobs data tomorrow. We had some payroll data, was it a couple of days ago? And obviously, I think it's the 14th and the 15th next week, Tuesday and Wednesday, is the CPI and the PPI. And I think all those sets of figures are going to be crucial. So I think it's going to make for some interesting watching over the next few days. But yeah, I think the room is there. I think the scope is there with the expectations and the rhetoric that he had. And yeah, again, picking up on Rob's comment about Jerome's legacy, and we've touched on this a few times, and I think it's so important. Yeah, he wants to be his generation's Volcker. And I think looking at what it was Bloomberg that I was reading yesterday when they sort of covered this testimony before the Senate Banking Committee, and Bloomberg said something along the same lines. Powell is laser focused on inflation, because to his mind, runaway inflation is far more damaging than any recession. And I think that's absolutely right. I think inflation has to be tamed. It is the big, it is the 800-pound gorilla. So yeah, I think we're more than likely to see that rate hike go along with the consensus now. And I mean, a couple of other things worth considering. I guess the economy doesn't seem to be broken yet. I mean, the jobs data tomorrow may suggest otherwise, but I kind of have a feeling it won't be too dramatic to the upside or the downside. So that, I think, also gives them a bit of scope to raise. And I think another thing worth considering is that one of the big doves at the Fed, Lael Brainard, is now no longer there. I think she's already moved on, hasn't she? She's gone to the White House. I think she's working for the administration now. She was obviously a big inflation dove, and I think that could well have a bearing on it. There's one less dovish voice in the room when the FOMC meets on the 22nd or whenever it is. So, yeah, I'm personally am pricing in a 50 basis point hike for sure.
One thing that he often says that I keep thinking about is, because you look to see what Volcker did. We had 2 recessions actually, when he was raising those rates. But you always look at what came after it, right? I mean, look at what the stock market did over the next 10 years. Like it just went up and to the right for basically the next 10 years. And Powell has even said this many times that we want to get back to that, like economic expansion where we don't have this sort of entrenched inflation. And look at what happened in the 70s when you did have inflation entrenched. Market just went sideways for 15 years. So, as painful as this process might be, I actually think it's probably the right way to go. The other thing that we talked about is sort of the jobs, right? Where the unemployment rate Rob mentioned, 3.4%. I think that in the most recent, I think it was yesterday, there was some job reports. And it looks like construction jobs are starting to go down, I believe. I think we recently saw this somewhat recently, which is interesting because it normally lags investment in that sort of sector by about 12 months. And that sector started to go down about 12 months ago. So I'm curious, Rob, the real estate market is sort of your forte, especially compared to me. I mean, I'm not in the real estate market at all, but I'm thinking about it in maybe 2026.
Ben, you've been thinking about it for like 6-8 months.
I know. I'll just keep thinking about it. And I'll just keep thinking about what I want to do. I want to be a landlord, or I just want to go earn 5% in a CD somewhere and forget about it.
We'll get to that.
Yeah, we'll get to that. No, I want to hear your opinion on it, because we have the real estate market is an interesting sector for sure, and I don't claim to be able to predict it. I mean, you see, there's like basically no demand, I wouldn't say no demand. There is some demand, especially early on this year, but there's the demand seems to be dying down as mortgage rates go back up. I think they went back above 7%, and likely going to keep going up as the terminal rate gets repriced. But there's like so little supply too. I think as investors, what we've seen the last 10 years, it's just really quick to the upside or really quick to the downside. But this just kind of seems to be a painful, slow bleed. Is that your take? Like, what's your sort of take on the real estate market? How bad do you think it'll get? And any perspective on when it might turn around? And I guess let's talk about the United States. I mean, you could talk about other places too, but real estate's obviously very localized and region specific.
Yeah, it's funny because like that's what me and my wife do. We purchase properties and we do short-term and long-term rentals. But it's funny because like it depends on the area that you're at. You look at these different. If you want to look at anecdotal type of information, you're like, oh, everything's doing pretty good. Like here in Puerto Rico, everything's hot. The prices haven't really gone down too much, and people are still buying, and there's still like not a feeding frenzy, but it's cooled off a little bit. But even right now, even with those high rates, there's still a lot of things that are being bought up. However, you have to also understand that here is that a lot of people just pay straight cash because they're just like, we want this and we want this because we know this place is going to go up and that's it. So they're sidestepping the whole mortgage rates, right, of 7%, obviously. But then the thing you just talked about, Ben, you talked about the construction business, because there's a couple of things that will lead you in and take you out of recessions: automobile industry and the housing market. And I was taking a look at, there's a data point on your website, which I steal from all the time. And it talked about U.S. privately owned housing units started monthly in thousands. And you can see that like not too long ago in like May 2022, we peaked out at like 1 million, almost 2 million housing units started. And now, as of today, we've dropped off the cliff, and now we're at like 1.3. So you can see that the new houses that are starting to be built, there's a reduction in that. So what does that mean? Well, that means that the different supplies that they're using, the lumber, the metal, the nails, the people that actually do it, the contractors, the real estate agents, everything else that goes along with that, the brokerage, they are going to see a reduction. So that's why it's such a big news as far as like in the industry. So what I see is not only that, but you can also take a look at the sales price or how many different houses have been sold. That's in a reduction. And there was another one, which I thought was interesting. There was one called the Zillow Home Value Index, which I thought that the values were going down. They're not really going down that much. There's just a less amount of inventory that's out there. So you still have, so that's interesting. So you still have the same amount of price. People aren't reducing their prices as much. And then you got a lot of people that just aren't going to build. So what does that mean? As time goes on, we just have less and less. And you'll see I think it's going to be a slow bleed for a while. So that's what the state of real estate that I see.
Yeah, it's interesting because the real estate market is so slow, but getting to where it's ever going to go, seems like it takes years. Go ahead.
Yeah. No, there's one more. The houses for sale sold ratio. Like there was one. It was topped out at 10 just about a year ago or so. Sorry. So 10. It was for every house sold, there's 10 being built, and the highest we ever saw it was in 2008, 2009 during the economic the large recession because of the housing market. So we went from that to now we topped out at around 10 recently, and now we're all the way down to 7.5. So the baseline's around 4. So it's actually not as slow as I thought it was. But I think if we're taking a look at the factors, it's actually going in the direction that it should be going to as a cool off as far as the economy.
Fair enough. I mean, I think it's. I want to pick your brain a little bit more about it on the next question, just to kind of see some stuff. But, Guy, what's your take? I mean, I know you're not in the United States or even close to it, but I mean, maybe you could talk about locally what it's like, or what is your take on just the real estate market in general during this period of high rates and low inventory.
Yeah, I mean, I can speak with some experience to what it's been like in the UK over the last sort of few months, even though I've been here in Dubai since late August now. So I am getting a bit of a perspective on the market here as well, which is pretty spicy at the moment, pretty hot, running pretty hot at the moment. But the UK, I mean, in terms of rising rates, I mean, that seems to have caused an enormous amount of pain across the UK. There were lots of people whose mortgage bills have been going through the roof, and obviously we had that kind of disaster sort of last autumn when Liz Truss sort of broke the bond market and everything went haywire, and so. Yeah, I mean, certainly in the UK, it's a tough time. House prices, I think the last statistic I saw, I think there's been a sort of general sort of 14%, I think it was, a 14% drop in house prices in the UK over the last either 6 months or a year or so. So it's certainly going down. But then, of course, that doesn't translate into the fact that suddenly people are able to enter the market because rates are so high, and every time they climb, that prices a few more people out of the market. Just a few more people who finally just go, no, we can't afford this mortgage. So, yeah, it's certainly it's been pretty tough. So I gather anecdotally over in the UK. Meanwhile, here in Dubai, which is a lot different market. Obviously, there's been huge influxes of people from around the globe. The property market is running really, really hot. That tends to be most pronounced for sort of high-end properties. Obviously, you've got lots of very, very wealthy people coming and swooping in here and snapping up very expensive homes. But I think the market in general is, as you'd expect, really, for a region, for an area that's kind of growing, becoming more significant all the time. So we've got, that's a tale of the two housing markets that I have, direct experience of, so to speak. But yeah, I mean, it basically it seems as though this rise in rates and is going to be, is going to cast a shadow for a long time. I think, I agree with Rob. I think it'll probably be a fairly slow bleed over the next, few months, years. I don't see a similar sort of crash to what we had with subprimes in 2008, 2009. But yeah, I think it's certainly going to be difficult for so many people to enter the market.
One thing that I keep going back and forth on with regards to like the real estate is, and I just want to know your guys' opinion on this, like the fixed income investing side is this risk-free rate, right? So you can think about like 2-year treasuries, whatever you want to think about it. You can get T-bills or you can get CDs in a bank, right? It's not flashy. No one watching this channel is going to really care about that stuff. But the point is like, when I think about trying to diversify my portfolio, for the most part, I've just been equities and crypto for the longest time. Obviously, the last year and a half, I've changed a lot of that to cash. Cash is king, right? But when thinking about sort of getting yield, you can do so with fixed income investing now, like to levels that we haven't really had since at least I've been an investor. I'm curious as to if that is interesting to you guys at all, or if it's not really worth getting out of bed for 5%, even if it is risk-free. And then Rob specifically, I know I keep picking on you, but I know you're the real estate guy here, so I just want to pick on you again. What's your thought here on, because I know people can use real estate, be an investor in the real estate market and right, get yield that way, but there is some elements that when I think about, say, like the next crypto bull run, maybe taking some out of that and putting it into the real estate market, because if the real estate market is in a bear market for a couple more years, that might coincide quite nicely. But I guess the question is like, is it worth going through the whole landlord process and doing all that stuff when you can also just go earn 5% risk-free rate? Like, what do you think?
That's a tough question.
I'm very ignorant on the matter, so
these are ridiculously long questions that you get. You're bringing me, Ben. It's tough, making me think. So I will just say this first of all. My wife is the brain power behind a lot of this. I'm just along for the ride. And the second thing is, it really depends on what you want to do with your money. Like, I always remember Mark Cuban, he had this interview. They asked him, like, how'd you gain all your money when you started your businesses? He said, well, I just locked up in T-bills and I got X amount of percentage and that was it. Because he was making, he was like, 100 millionaire, billionaire. He's locking up a ton of funds and he would just, use that. The thing is, you have to think about is, if we're going to take a look at inflation, 5% is great, but you're not going to hit inflation. However, what's even worse than that? Taking a hit on your crypto.
Watching
95%.
Watching alts go down 95% of bear market.
How dare you talk about my portfolio like that? But you're absolutely right. So like with these things, you just kind of look at like what I want to do. And this is the thing that always got to me about the crypto space. And you can do whatever it is you think is best. But I know some people are like, I'm going to diamond hands and just write it all out. And I think you're welcome to do that, but you got to have a long horizon. For me, I'd like to diversify just a little bit and put it into properties. And the thing is like in the old days, a lot of people would buy houses, long-term rentals, wait 30 years and then sell. Then we got into, well, I'm going to buy this house, I'm going to fix it up and I'm going to flip it. That's super risky. For us, it was like, well, we're going to buy these properties, we're going to do short-term rentals. we can do the landlord route if we want to, or we can have a management company help us out and take 10 to 20% of the profits and not really do too much with it. Let the different properties appreciate. And also, you can claim this on your taxes as far as the appreciation of the value of the asset that you have, which is your real estate, which is also nice as far as when you're doing your tax. I know no one likes to think about it and it's super boring, but you got to think about it when you're paying through the nose. So for us to do these types of things, and also it's also good for generational wealth, thinking about your kids and of course our grandkids. As time goes on, they can do what they want with it, but hopefully they would rent it out. But that's what we do. So I just think if you wanted to, like, I look at T-bills and like, that's a pretty good deal, right? I mean, 3 months, 6 months, 9 months, a year, maybe I would think about doing that, calling up my bank and saying, I'd like to do this. But it's just something off my radar. And the only time I think about it is when Ben mentions it. And I'm like, shoot, I should actually do that.
Well, I'm just like, that's basically all I've been doing for like last 15 months or so. And I'm like, all right, well, at some point, I need to think about some other markets here. And real estate. Hey, Rob, remind me about the tax advantages in a couple of years. To real estate, because I feel like that's one of the things that I think people are the most optimistic, or that they like the most, because it carries a ton of tax benefits. Guy, what about you? Are you in the real estate market? Like in the form of like being a landlord or anything like that? And what are your thoughts about sort of the same question?
Yeah. So my wife and I own our flat back in London, which is now rented out, and. Yeah, I mean, I think us Brits, I don't know if Americans are the same, but I mean, us Brits, I think there seems to be something kind of hardwired into us about home ownership. It's it's something very, very close to our hearts. And I know friends of mine, European friends of mine, often find it a bit strange. They say things along the lines of, it's weird how obsessed you guys are with owning your own home. On the continent, the rental market, renting has been the way to go for years and years. So, but I mean, yeah, I must say I like owning property, and it's something that I probably would consider looking to get more into in the future. And I think there is that demand. I mean, especially in places like London, where our flat is, people are desperate to move there. So there is always an excess of demand, not enough supply. So if you can get in on that, then it's kind of a no-brainer. So that's something Mrs. Guy and I have kind of talked about as kind of future investment strategy. I think in terms of other kind of in terms of things like bonds. I mean, if I was US based and able to get my hands on T-bills sort of fairly easily, then I'd certainly be considering it. I think 5% risk-free is certainly worth considering. I mean. Yeah. I have to say though, if rates keep going higher in the US, I mean, bonds, they could crash even more. So I'd be tempted to kind of wait until the Fed has at least paused, or it is looking like it's going to pause or pivot. I think kind of jumping into the water when it's hot just end up getting you burned. So yeah, I think the idea of something sort of fixed, fairly risk-free and fairly boring is a good idea. Is a good way to round out a portfolio, especially when you're heavy in crypto and right. Sort of bearing all that risk as you go along. So yeah, I think probably for bond yields and stuff, they'll be a lot more attractive, kind of around 7%, and hopefully when they're above the rate of inflation.
Mm-hmm. Yeah, I think during periods of high inflation, the time to often buy bonds is around the time of the pivot. I think, like you said, like front running it doesn't really get you anywhere, generally speaking. But the other thing too that I think, at least the way I think about fixed income investing, is it's boring, but and of course you're still losing value to inflation. But I mean, some of these things pay out monthly or yearly or semi-annually, and you can use that to go invest in risk assets while still maintaining your capital, right? So that's kind of how I see it, and that way you don't lose your capital, and then you sort of have a steady income stream to put back into riskier stuff. But anyways, for the dozens of people that have made it this far, after talking about the boring macro stuff, let's talk about crypto. I just, I don't talk a lot about macro stuff with people, so I always like to get people's opinions on it. But let's talk about crypto. Guy, I'm going to go to you on this one first. And my general question is about, just about when you're looking to get cryptocurrencies, what are your main considerations? And are there any red flags that would keep you from sort of getting one? Are there things that you really like to see, and if they don't have it, it's just like no deal? What are your views on that, and how have you been navigating crypto in terms of like how do you figure out which ones to sort of pick up?
Fundamentals. As far as I'm concerned, yeah, it's all about, for me, it's all about use case. I mean, I'm always taking a long view. I'm always investing for the long term with crypto because I'm not a trader. I don't have the skills. I don't really have the time or the inclination to kind of to try and trade the markets in the short term. So when I'm looking to buy, I'm looking to buy for for the long term. So yeah, I'm looking for things like an obvious use case. Obviously, I'm looking for other things like a high TVL relative to market cap. And there's one particular project that stands out to me in that respect, which we'll get to a bit later on, I guess. And then user demand, transactional demand. And something that I focus a lot on as well is the team. I'm trying to remember there's a big kind of investor out there. It might be Mark Andreessen, but feel free to correct me on that. But they say they focus almost solely on the team. So what is who are the people building this project? If they're passionate, if they're committed, if they have the background, if they have the skills, then chances are they've got everything in the right place to make a success of the project. So I do think that is, and I like that human angle of it as well. I like kind of digging down into that because, yeah, so that you can get so lost, I think, looking through all these kind of fundamentals in crypto, digging into tokenomics and things like that. And sometimes I think it helps just to zoom out a little bit and go, who are the people building this thing? What kind of vibe do they give me? What sense do I get of their commitment to it? So, yeah, that's something that I'm kind of focused on more and more. When it comes to things like TA, I mean, I'll certainly get the opinion of people I know who are much better at TA than I am. But it's kind of a secondary consideration, really. So. Yeah, and obviously it cuts both ways. So if I see a team with members with either kind of shady or not particularly, one thing I kind of look out for is are they committed? Is this a team? Are these team members that have kind of jumped from one project to another? Are they a gun for hire, or are they someone who sticks around even when things are tough and just keeps building? So I guess in terms of red flags, it would be things like commitment from team members and obviously all the user ones. If there's no use case, if it doesn't seem to be answering a question, solving a problem, then yeah. But fundamentals every single time.
One of the things you kept mentioning is people. I like that. I mean, it's sort of like investing in people is a big aspect of it. Like if you can find a person that can, make their all their projects turn to gold, that's ideal.
That is great.
Yeah. Rob, what about you? I mean, I know you speculate dubiously, in fact, in the altcoin market. So what do you what do you mainly use to sort of figure out which ones you're going to pick up?
Well, Guy just gave a perfect answer. I mean, for what it is. I mean, the fundamentals. I mean, just listen to that a couple of times, and that'll lead you in the right direction for everybody watching the video. Like for me, I take a look at there's four things. I always say, is this going to make the cut? And the cut is the CUTT, the community. How big is it? How are they growing? What is the utility? Is it a Me Too type of thing? What has the team done so I can know where they're going? And then, of course, the tokenomics. So I take a look at those four things and go from there. But I will say this: team is important. I mean, it's super important, right? Because I mean, I think that's why. Like, okay, for example, I know people are gonna be ticked off, but I mean, Solana had a lot of rock star developers, and that's what really brought them in. Of course, there was some other things they did, but you know, that's a whole nother show. I will just warn people on this. Team is important. Where they're going is important. However, it only holds up until you realize that they're just people and they're prone to screw ups. And I'll give you a prime example. Voyager, which just got bought up by Binance US. Steve Ehrlich was the CEO. I had on my show multiple times. Steve was a smart guy. He was the CEO of E-Trade. He was the CEO of Lightspeed. He knew what he was doing, but they got greedy and he made a stupid error. Him and his team made a stupid error where they loaned a Three Arrows capital of almost $640 million, which tanked the whole company. So be careful with that because the team works until it doesn't. The project works until it doesn't. And all this stuff is super risky, not financial advice.
No, I mean, it's fair. It's a good reminder.
Yeah. And you're right. You're absolutely right, Rob. And I guess as well, you know, I was talking about the importance of team and what they've done before and stuff.
Right.
But I guess you have to remember as well, isn't it, that someone who's successful, they probably have a litany of failures behind them. You know, success is about falling down, is about failing, getting up again, learning from your mistakes and moving on. And I don't think there are many successful people out there, many people who have built something that lasts, who haven't got stuff, you know, who haven't started ventures that never went anywhere. So
exactly.
Perhaps. Yeah, it needs to, and just remembering that these people are human as well, and even people with the best intentions, the best minds, the best abilities, they could still screw up. They could still get unlucky, couldn't they? What's it Napoleon said when he was recommended a general or anything like that? When he was considering a general, he always said, "Is he lucky?" I know he's good, but is he lucky?
That's pretty good.
That's what we need to be asking of our developers as well. I know they're good. Are they lucky?
Yeah, that's what every investor should say. Am I lucky enough for this run? Because that's what it's going to take. A little bit of luck.
Guy, what year was the Coin Bureau channel started?
The channel started 2018.
Rob, what about you?
The December 2019.
Again, then I was 2019 too. So what's interesting about all three of us here is when did we start? Not in the bull market, right? Not in the bull market. Why?
True.
Because the bear markets and even the recovery year, that's when you build, you know? And I do sincerely hope that as sort of depressing as the market can be at times this year, and there's going to be some apathy this year, I think. But I mean, like, the way to get through it is I hope there's at least one person in the audience building something in the cryptoverse. Because again, when do you build? You start in 2018, you start in 2019, and then look what happened in 2020, 2021, and so on and so forth. So I think, you know, I mean, this behavior repeats itself. It's very cyclical, and I mean, I know it's sort of been doom and gloom for 15 months now, but you know, it's interesting because I you know, we talk about the macro stuff, we talk about how difficult things might be for a while, but I think all three of us are very bullish on crypto long term and just sort of see it as this is the time when, hey, just build something, you know, and hopefully someone out there is building something in crypto or starting their own YouTube channel. I think this is the time. But
No, everything. I mean, everything that happens good is in the bear market. I think it was LinkedIn was started in the bear market. You had Uber started in the bear market. These major, enormous companies were started when there was, you know, no real hype around it, and then here we are.
Maybe someone watching now will go start their YouTube channel, and then in like 2 years, we'll bring them on as a guest and say, "Hey, tell us about your journey."
But they'll be bigger than us, and we'll have to say, oh, and they'll say, well, I was watching one of your live streams, guys, and that gave me the push that I needed to start, and we'll rue the day.
Yeah, hopefully. Last question, I probably more interesting question for everyone. So you close your eyes and you wake up, and it's 2025, and you have 10 seconds to do something, and you decide, you know what, the most important thing to do is to check coin market cap, just to see what's going on, see who's who and what's what. What do you see, Rob? What do you see when you pull up coin market cap in 2020? And let's say late 2025, because there could be a difference between like early 2025, late 2025.
Okay.
So what do you see? It's December of 2025, and you pull up coin market cap. You only have 10 seconds to take a quick peek. What do you think you see?
I mean, just by history, I know everybody will say like, well, Bitcoin's going to get flipped at some point. And I'm like, okay, just like a Bitcoin ETF is going to be approved any day now. And just like the XRP and Ripple case will be solved any day now. I'm like, oh, I don't think it's going to happen. So I'm just going to say it's going to be Bitcoin will probably still be number one. And I like that interview you had with Lynn Alden, where she said, look, I'm just looking for the use case. And for me, it's Bitcoin and Lightning and tokenization of assets. And that's pretty much it. And I was like, that makes sense. So I just see like that. I see Ethereum is running away with it because everything's being built on Ethereum, ERC20 tokens, EVM compatibility, and then the layer twos are crushing it right now. So I got to go with those two. Now after that, I'm not for sure. I would like to see if it wouldn't be great if Ripple did win that case. If Ripple wins that case against the SEC and they've already got that momentum, I can see them in the top 5 still, because there's so many people like, I want to use that. And that would be like a case that Lynn was talking about. I mean, not to put words in her mouth. So there, and then I think the other one would be either a layer 2 solution, and I'm going to be super biased because I own a lot of it, Polygon. And then after that, maybe another layer 1 solution, and whether that could be Avalanche or Cardano or Solana, who knows? But I can see that. But also, that's in the top 5 non-stable coins. But I think that you're going to see a stable coin in there because that's what people are going to go into.
Right.
And that would probably, and if as long, and who knows, hopefully USDC, but who might be Tether.
Well, I think this Tether stuff will be, we'll be worried about it forever. It kind of seems like what's happening. Speaking of XRP, and again, I don't really talk about XRP that much, but it's hard not to take notice when you see certain altcoins outperforming. And in a week when Bitcoin and Ethereum and everything else is down, XRP is up 8%. So I'm like, what's going on over there? And winning, I know a lot of people don't necessarily like XRP, and of course there's plenty of reasons, but I do think if there's anything positive that can come from this, like if XRP gets makes any progress here with the SEC, I think that'd be beneficial for the entire cryptoverse. And I think a lot of these crypto projects are sort of just like, we're just going to sit around and wait to get picked off one by one, or do we take the fight to them?
That's what I'm saying. We're going to sue them.
Yeah. Guy, same question. You wake up in December 2025, you have 10 seconds, and the only thing that you think that the most important thing is to go pull up the top 5 on CoinMarketCap. What do you see? What do you think you see?
Can I first say that I wake up late 2025, people are still fudding Tether, people are still fudding Binance, and the Ripple case is still ongoing. That said, top five, this is a tricky one. I think there's a 50-50 chance Ethereum will have flipped Bitcoin by then. I think it kind of depends on things like stablecoin regulations. So if we see some sensible stablecoin regulations in the US and elsewhere, then I think that could be the factor that takes Ethereum past Bitcoin. But as I said before, it's just a number on the table. I don't think it makes any real difference to the projects themselves. So let's say, for the sake of argument, to disagree with Rob slightly, I think Ethereum number 1, Bitcoin number 2, stablecoin USDC. I think Circle is just so terrifyingly powerful that I think USDC will probably win out in the long term, and I guess late 2025 is kind of the long term. Then, this is tricky. I'm tempted to say, and again, this is dependent on regulations. I'm tempted to say something like Lido in number 4, because I think, again, this assumes kind of good regulations around staking and DeFi, but I think this is a big institution. This will attract a lot of institutions. Institutions, they love staking, and I think they're going to love liquid staking even more. So it's a little bit left field, perhaps, but I think Lido could be certainly up there. If not top 5, then a very good chance of top 10. So that leaves, I think that's 1, 2, 3, 4, isn't it? That leaves room for one more. I'm really tempted to say unknown coin, because I just wonder whether, a bit like Solana did, it seemed to kind of come out of nowhere, didn't it? And suddenly it was right up there. So I want to say a project that maybe hasn't even been created yet, but failing that, I think we could see a DeFi protocol up there. I think we could see something like Uniswap or Aave. Both great projects, both I think with so much potential, especially if DeFi doesn't get wrecked by regulations. And I should say as well that this list is kind of based, assuming that this is a list based on fundamentals, I should say. Right. I think it would look very, very different if it was based on speculation. I'm looking forward to late 2025 and someone digging this up, and for that list to be completely wrong.
Yeah,
oh,
so
yeah,
dig
no,
up like.
Yeah,
I mean, like, can you believe Shiba Inu is number 1? That's crazy.
The thing. Like, that's the thing. Like, you see these other projects up there. I mean, like, XRP is one that has been up there forever, and I think people don't really assume that it will be, and then it just keeps being up there in like the top 5 or so, especially excluding stables.
Yeah, you know what else is always up there that I just glance over is Tron. Think about that. Like Chop 25. It's like always been there.
It's number 15 right now.
Yeah. See, I'm like, and no one, like, I'm just like, Tron, Justin's son, haha. But it still stays in there. I don't know how that works.
Well, and you also have Dogecoin that sort of just pops its head up. I mean, it's literally number 8 right now. And if you exclude stables, it's number 6. Like, think about that. Like think about it for just a minute, right? Like, when you exclude stables, Dogecoin is number 6. So it's one of those things where, like, it doesn't always make sense, but you could have the top 5 and then just Dogecoin blasts off again because of some random reason, like
because Elon Musk tweets about it.
And maybe that's the utility of it, is you have billionaires like Elon Musk and et cetera tweeting about it, or that's the utility. I don't know. Anyways, I'd like to get everyone's questions. If you guys have any questions for Guy and Rob, feel free to go ahead and ask them in the chat.
Ben, can I ask you? I mean, what would your top 5 look like?
Yeah, I will.
Because I think if Rob and I are going to be proved so spectacularly wrong in 2.5 years' time, I think it's only fair that you join us in the doghouse then.
I will. I was just getting people to ask questions first, and then I'll give them my 5. So yeah, ask questions if you guys have any. We'll get to those. So I would say, so the counterpoint to Ethereum is that, think about the fact of how, again, Ethereum is the backbone of essentially a lot of stuff going on in crypto. I think it will be no lower than number 2. Okay, like, I don't think it's going to be number 3. Everyone talks about Ethereum killers. I don't think they exist. I think Ethereum is going to stick around, and it's going to be number 2. But with that said, look at this cycle. Despite everything, the Ethereum Bitcoin valuation still went higher last cycle, by a lot, in fact, than actually where it made it to this cycle. So that's one counterpoint to think about. The other counterpoint to that, though, is that it's still at a relatively high valuation right now. So if it's going to use that as a springboard, then you can make that case. My guess is that if Ethereum is going to flip Bitcoin, which you could argue is sort of it's on a long path to potentially doing that. But if it is going to do that, I don't think it's going to be next cycle. I think it would be potentially 2 or 3 cycles away. It would be my guess, frankly speaking, because I don't really think that I don't really think it has the ability to flip Bitcoin next cycle. I think you're going to have to see another period of extravagant QE, of fairly low interest rates, and it's hard to imagine. While I do think the Fed will flip back to QE at some point, within the next, 12 to 18 months, they're going to be wary of flooding the system with too much money because they know what happens during periods of high inflation. It just comes right back. So I would say Ethereum's return or Ethereum's market cap will still be lower than Bitcoin's next cycle. So Bitcoin 1, Ethereum 2. Number 3, I would probably go with a stablecoin, just because it seems like that's going to be sort of a likely outcome. I also am in agreement with Guy, and this happens every cycle. There's always one or two projects that you don't even talk about in the bear market or sort of the year after the bear market. You never even talk about them. Why? Because they don't exist yet. And when do they start existing? It's when the founders usually think the bull market is about to start, is when they launch them. A lot of people do that. Think about when Ethereum launched. It was like near the end of 2015, right? You think about when a lot of these other projects launched, Avalanche, Solana. A lot of them launched. They didn't. I mean, they launched when the market was not looking so bad. And I think one of the reasons is if you're a founder, you don't want to launch a project and then watch it go down 85%. Like it creates all these like psychological barriers in the next bull market that you have to break above. But if you're a new coin, no one really knows what it's going to do, right? I mean, you're just like, well, the sky is the limit to some degree. There's no resistance levels on the way up because there were no people, getting fearful on the way down, like, capitulating, or whatever it might be. So I would say at least one or two of the coins in the top 10 are going to be ones that I think don't exist today and are probably being built today, and the founders are just sort of waiting for the right time to do it. My guess is that the coins that will fit that description will likely launch at the end of this year or early next year is my guess. So I think that'll be the time to really look out for that, sort of just before the halving, and also just before a potential pivot back to quantitative easing. I think that'll be the time to look out for. And then I would like to say I don't think I think some of these are just going to continue to slowly go down. Like Litecoin, every cycle, if you look at every single cycle for Litecoin, it tends to just kind of drop 2 or 3 spots. I think that's going to continue, though, albeit in the halving year it tends to outperform. I think Cardano could be pretty high up there as well. I know that's not necessarily a popular one, especially how far down it is right now. But I'll tell you this, I watched ADA go from $1.38 to 2 cents in 2018, and it was a 98% drop, 98%, and it still went on to put in a new all-time high. Okay, to give you some perspective as to what that would mean from ADA's from its previous high this cycle at like $3 or something, a 98% drawdown would put it at around 4 to 5 cents. Okay.
Hey.
So think about how bad it feels, to be a Cardano holder right now. I mean, of course, every altcoin or most altcoins are down that or more. I mean, Solana's down even more. It's gone down 97%, at least at where it was at the low. And Polkadot is no exception. Avalanche is no exception. A lot of these coins have gotten hit pretty hard. But I think there's some element that these coins can get sold off quite brutally in a bear market, and still potentially recover. I mean, look, one of the things Cardano has going forward is that it hasn't really been tied up in any of these FTX or any of that sort of stuff. So it doesn't really have those bags to deal with, there's a lot of things we could talk about. So I think Cardano is going to be up there. Is it going to be in the top 5? I don't know, but I could certainly still see it in the top 10. I think XRP is going to probably be in the top 10. I mean, look, if it basically just sat out this last bull market, right? It sat on the sidelines and didn't really do a thing, and it's still, when you exclude stables, it's still number 4. It's number 4, and it didn't do anything last cycle. So I mean, XRP is also probably going to be up there as well. And I don't know. I don't know where BNB is going to be, because right now it's number 3 when you exclude stables. So I don't really want to take a too strong an opinion on that one, because it's one of those ones that could do very spectacularly if the exchange survives, which I mean ultimately I think would be a good thing for crypto. Like I'm certainly not rooting for all these things to go down, but it's also one of those things that if it does happen, then it could be one of those things in 3 years you look back and say, well, I was nowhere close. So I think I'd say Bitcoin, Ethereum, a stable coin, probably one or two layer ones, and then a couple coins that don't exist today.
I'm glad you brought up that the distressed asset part, the 98% loss, because when you asked Lynn that same question, like what would you invest into? She talked about commodities, precious metals, and some different beaten down stocks, and she also talked about crypto. I mean, what's going to be more distressed than us? Let's be honest. I mean, we're down, and some are already 90%. So if you think about it, if you're looking at distressed assets, this is it, maybe. And we got more of an upside, I think, than we'll say in indices.
Right. I will remind people though, the first rule of crypto for me, anyways, is don't marry an altcoin. You can have an opinion about one, but I mean, the truth is like Bitcoin and Ethereum. That's where I think you really want to be long term. And to speculate on some other ones, I think is fine, because I think there's certainly other ones that have their place, but you don't want to do so at the expense of not having the blue chips, right? I think you start with Bitcoin and Ethereum, and then from there you could expand out to other things if you so desire. But you also see just how brutally things can go down in a bear market, and the blue chips do at least help. They don't go down as much, right? I mean, there's a big difference between 80% down and 95% down. There's a huge difference between those two numbers. All right, what questions do you guys have? Let me see in the chat if there's any.
My question is, when is the Coin Bureau live event again? Because I keep forgetting. I still got to get. We were looking at plane tickets yesterday. I'm like, I gotta ask. Is it June something?
10th of June. Yeah, 10th of June. So
that's coming up in only 3 months.
Thank you for asking. Yeah, 10th of June in London. Venue TBC. Last time I checked with Macy.
Another coin I'd like to see in the top 10 again, which is probably somewhat controversial. I'd like to see Chainlink make its way back up. It's not necessarily going to be that popular. Yeah. All right, let's see. I'm trying to find some good questions. Someone says, are you still comfortable keeping some of your cash in USDC with some of these crypto banks collapsing? We saw Silvergate recently go down. So are you comfortable keeping some of your reserves in USDC still?
Yes, it's not something that keeps me up at night, but I do monitor the situation. I do have the majority of my portfolio, or the single largest holding, I should say, of my portfolio at the moment is USDC. So it's something that I'm always aware of. But yeah, I'm comfortable holding it at the moment.
Yeah, I same with Guy. I just don't hold a lot into it because, what's the point, So. I'll just I'll hold some in there if I want to move things around. It's a heck. I got to tell you, I wish my contractors would take USDC because it's a heck of a lot easier to pay them. I had to pay a guy yesterday using Zelle, and there's a limit. There's a limit how much I can pay him, and they're doing construction on our sports facility. And he's like, "Well, I use Zelle." I go, "Okay." Well, I was trying to send some $1,000 limit per day, my own money in my business account. And I'm like, "Can we do this any other way?" He's like, "Cash." But I'm not even there, so.
And then I got out of the stablecoin market actually in March of 2022, so it's been about a year. It's probably certainly you could see it as overkill, but I'm just like, hey, I don't know. I don't want to be sticking. I didn't know which ones are going to survive. I mean, UST took the plunge, and I certainly am glad I never had that one, but. Yeah, I mean, it's sort of one of those things where it's like I don't really know, so I just kind of get out of it and keep it in cash, and then when the coast seems clear, then I come back in. But some other questions. Here's a question that we really don't talk about on this channel, and I honestly don't really have a whole lot of expertise in this area, but what do you guys think about the NFT market, and are there any specific NFTs that you are interested in? And the answer, I mean, for me, I'm not really much versed in that world, to be completely honest. But I didn't know if you guys were.
Some people sometimes ask me about NFT investing and how to spot, any tips for spotting the next big collection. And I never really have much to tell them. It's so tough. I think you've got to rely so much on luck to try and get on the next punks or the next apes. And I don't feel that lucky. So yeah, it's something I kind of watch on with interest. As I've said before, I think for me the real interest with NFTs kind of goes beyond JPEGs, goes beyond PFPs. I think we're only just kind of getting started on what NFTs can really do. So I'm really curious to see what the use cases and how NFTs get deployed and how they get made more usable in the future. And if people ask me about NFT investing, I often think, well, probably the best way, or the way that I prefer, is to invest in the underlying networks, in the blockchains that they run on, because that for me is the safer way of doing it. And obviously starting with Ethereum, there are others, of course, but it's something I don't know if I've just got the bandwidth to dedicate to it.
I got to tell you, like, I see it, like when NFTs first came out, I didn't get it because I'm like, this is stupid. JPEGs and Ethereum rocks. And I'm like, they're paying how much? That's dumb. But I can see how it's going to work with gaming. And an example I always give is Fortnite created in, I think it was 2017 or 18. It took them roughly a year to be $1 billion industry. And they're a free-to-play game. And all it is they're buying skins and weapons and upgrades. But you can't take those anywhere else. So like with the NFT world, that's the great thing. We're trying to put together this game with Flappy Bird, and it's all going to work off of NFTs. So the NFTs are going to be upgrades, which they're going to be able to use with their Flappies, and of course they can resell them for whatever they want to. And then the money that you put in, you can actually, do other things, and then it's just the whole ecosystem can work. And that's just in gaming. I think that's the next big thing. Now, if we look at real estate and digital IDs, and then we talk about ticketing and something like that, it's another world. But it all has to, like Guy said, it's all what it's built on the underlying layer and how it's going to work. So just invest in layers if you don't understand the NFT part.
Maybe in 30 years, we'll be walking in the metaverse into our digital house that we have a digital mortgage on, and our NFT artwork is on our digital walls.
Have you tried to walk around in like any metaverses?
I walked around. I walked around Decentraland. The furthest I've really done stuff is just to walk around Decentraland.
Yeah, I tried. Yeah, I tried it when Cardano did some kind of like conference where it was like in this metaverse thing, and it was on your browser, but it was still kind of goofy. I know Guy did something in the metaverse for like Shark Tank type thing, but
yeah, no, I haven't done anything like where you really go and I haven't done like sort of that immersive experience.
Yeah, it's an odd experience. You can tell that you can tell that we're on the cusp of something. But it's so complex. There's so many, and I think it's largely a question of hardware, of just having the bandwidth to do this, to render all this detail in real time, and for so many people to gather together in the same place. But certainly, yeah, it's not optimal by any stretch of the imagination just yet. But you really do feel it's like this is going somewhere. This isn't BS. This isn't a fad. I don't think it will last, and it feels like we're just at the beginning of it. So I am curious to see how it goes. But yeah, we could be in that situation, Ben. That whole everything. Find ourselves increasingly digital. It'll have crept up on us. It'll be a weird thing,
especially when people are becoming less and less able to afford things in the real world.
Yeah,
I mean, it's kind of a scary thing, but it's like more and more people are getting priced out of things. There was like stories about people who they could. I was reading one story where someone was able to afford sort of this apartment when they were like a waitress back in college, and now that they're a lawyer, like 20, 30 years later, they can't afford the same apartment just because it's gone up so much.
That's crazy.
It shows you. I mean, because it just shows you how how insane some of these prices have really become. And the Fed, they're trying to they're trying to do what they can, I think. But the truth is, disinflation is still inflation, right? It's not deflation. Prices are still going up. They're just not going up as quickly. So
yeah, no, it's there's that chart that that Zillow home value index. Almost 10 years ago, the average home value was $144,000. And now we're looking at like 346,000.
The one issue I have with that is that, think about Zillow. They entered the real estate market, and then they basically didn't survive it. I believe, like, they ended up having to like offload. Wasn't it? I think it was Zillow that ended up having to like sell tons of property.
Yeah, they tried to buy up everything and then just be like, not just the app that they do, but to buy it up and then do short-term and long-term rentals, and it didn't work out.
Yeah, so I guess my sort of like my counterpoint to that is, like, if the company that dedicates their entire business to predicting home values can't be successful in buying and selling homes, then what value? I don't know. I'm getting too far ahead of myself, but that's kind of something I think about. I don't know how valuable that index is, because a lot of times sort of the estimate on the house price is completely different than what it actually sells for. Anyways, I think we should wrap it up there. We've already gone over an hour, like we usually do. Thank you guys for tuning in. Make sure you guys subscribe. Go subscribe to Guy and Rob. Links to their channels are down in the description below. Next week, we are on Rob's channel, I believe. Is that right?
Yeah. Yes, that's true.
All right, so we will see you guys next week on Rob's channel on, I believe, Thursday, but if that changes, we will let you know, either Thursday or Friday, but it's usually going to be Thursdays. If you're ever watching for us and we're not on Thursday, it's probably because we're just going to do the video on Friday. But all right, guys, that'll wrap it up, and we will see you guys next time. Bye.
Bye. See you next week.